Alright, so this video it's going to be the pre-FOMC analysis. Right, so let's get started, because I think I want to highlight something that is significant to the price action moving forward. So let's start off from the weekly chart right here. As you can see, for the past few months we have been bullish. The trend is towards the upside and we are in a bullish order flow. In the current time and date, we are actually trading down into a discount PRE. These two down close candles with this fair value gap here, this is your discount PRE from this swing low to this swing high. As you can see here, and for NQ we have traded down into this down close candle, which is also a proportion order block because it has traded down into the last down close candle that took out sell side liquidity with SMT against ES. So I'm going to stick to the higher time frame order flow, which is bullish. So I'm not trying to call tops just yet. I'm going to lean on to the fact that we have reached into a discount relative from this swing low to this swing high, as you can see right here. And this area here is where you want to look for longs. On the 6 hours time frame, within the proportion order block, we have SMT on the lows between ES and NQ. We have closed above this this down close candle for ES and this down close candles for NQ. Personally, I am going to trust this SMT, and during FOMC itself, I'm expecting price to reach into the order blocks in order to send the price higher. So I believe this is the start of the market maker buy model towards this highs here and this highs here for Nasdaq. With that said, the clearest trade idea that I can see from here is this order block right here to here, either the high or the opening price. For me, I would prefer to use somewhere between 25% to 0, so it's somewhere around here. I think this would be the best entry here, or if I want to be safe, it would be somewhere around here. Eventually I will get 3R ish for something, 3R plus for NQ. For ES is not that much in terms of risk to reward, so I would much prefer to take the trade on NQ. Right here, as you can see, it's only about 2.5, right? Unless you're going to take, no, it's still 2.5, 2.6. So I would prefer to trade on NQ instead for this trade idea here. FOMC, could it be manipulation? Could it be that we trade higher right now and then FOMC just crashes taking out the lows over here, it is highly possible, or we can do some consolidation, something like this, and on Friday NFP we drop down here. That is also possible. Right, so I would limit my risk here, okay, because we're trading prior to the news. If you look at the monthly chart, we are going to close the month today. ES is probably going to have this monthly fair value gap. NQ, unfortunately, no fair value gaps. Unless you want to use the implied fair value gap from ICT, which is basically 50% of the week, discount week, right? So starting from Thursday, we would have a new month open. In that case, it is highly likely that price might want to tag into this fair value gap for ES in order to send the price higher. That is totally possible as well. This to me is a bullish fair value gap because it is supplemented by this down close candle that has traded into a fair value gap. Right, so if this down close candle did not trade into any PD arrays, then I would not consider this as a supplement to this fair value gap right here. So similarly for NQ, this order block right here has traded into this tiny little fair value gap here, or if you want to see it this way here as well, it is possible. This small tiny little fair value gap, and then it traded higher. So to me, if NQ wants to come down into this down close candle for support, it is possible as well, right? So there are a lot of things that are going to play a part, and because we are in a bullish order flow and we are really bullish, personally I don't expect that price would want to reach into the fair value gap before higher prices. I might be wrong, so let's see. Okay, let's see. On the daily time frame, to me, as long as we can close above previous day's high, I think that would be sufficient to call a change in the state of delivery for this downtrend here. So this would be your inflection point, whereby we start to trade higher as a mirror to this downside right here. Okay, and if this is true, this by itself is your false market structure shift. So if you are ICT, this would be your 2022 model. You have your highs, you have price trading above these highs, and then you have a shift in the market structure right here, taking out the swing low, fair value gap entry, looking for relative equal lows down here, and then you have your liquidity void down here. We got the complete fill, and then right now we have this fair value gap. The problem with this fair value gap is that it is in discount relative from this high to this low. You see that? So this is a low probability fair value gap. Okay. And in the case of false market structure shifts, right? So typical pattern traders, pattern ICT traders, they would think that this is your bearish fair value gap, and they will try to short this fair value gap to take out the lows down here without any context. So for false market structure shifts, the reversal, it's going to be explosive because they are not going to allow the stops up here to be pulled, or they would allow them to cut their losses, so to speak. So if I am right on my analysis that we are probably going to trade higher, and this SMT here is indeed the low for this impulse downwards, then we are going to see a low resistance liquidity run towards the upside, making new all-time highs. And that's basically it for this video here. Let's see if I'm right. So for FOMC and NFP, do take things with a grain of salt. Everything is 50-50 because basically it's manual intervention, right? And with this, I will end this session here. I hope you enjoyed it, and if you find any value or gained any insights, do leave a like. And if you have any questions, do leave them in the comments section down below. Tomorrow, because we have a new month open, I'm going to be going through other assets like commodities and stocks, because for those assets, higher time frame charts are good to know, good to read, because you can utilize them for your long-term investing portfolios. I say that with quotes because for me, long-term investing is basically a position trader, a long-term trader, right? Because eventually you're going to cash out. So yeah, with this, I will sign out, and I'll talk to you again at the end of the week when the market is closed. And I'll see you again. Good luck trading.